Welcome to Season 2 of the Cryptopulse podcast, your ultimate guide to the world of crypto, Bitcoin, and world economics. We're here to guide you through the crypto universe with thought-provoking topics, in-depth knowledge, and information to help you make informed decisions. We'll also be interviewing some of the best minds in the industry, such as CEOs of crypto projects, traders, economists, authors, and development teams from around the globe. And now for the episode.
Hello and welcome back to the Cryptopulse podcast for another one of our episodes about crypto and macroeconomics. And this week we're going to be talking about how to build a crypto portfolio in the bear market. And before we start, this is not financial advice, but just our opinions and some things that we've learned over the years and some things that we're implementing ourselves.
Yeah, absolutely. And look, if you speak to anybody that is a long-term investor, they will have a different way of going about this. I've spoken to a few people that are really good professional traders that think that, actually you should be preserving capital during bear markets and waiting for the next bull run. I speak to other people that talk about averaging down from the top and building out a portfolio that way. I don't think it's any secret you and I have spoken about our strategies on the show before, but I think since we are right in the midst of the bear market and the news is typically gloom and doom, I thought that we could maybe just expand on that a little bit and talk about our methods and maybe give you guys some inspiration.
Definitely, and I think we may differ on opinion on some of these things. That would be interesting. It'll be interesting to find out. So as we know, we've been in a bear market since, well, I guess it depends when you define when a bear market starts, but certainly the last 12 months have been pretty bleak, not just across crypto, but across all equities and other markets, and even commodities haven't been particularly great. And as the old saying goes, when there's blood in the streets, there's time to buy. And we have been doing exactly that. And there's plenty of people on Twitter and other platforms that talk about how the bear market's going to get way worse and how you shouldn't buy now. And like I said to you, Ben, the other week, it feels just like when everybody was saying in the bull market, don't sell your crypto now because Bitcoin's going to 100K. It's the exact reverse of that.
Yeah, absolutely. And I think you have to take things with a pinch of salt. We certainly do. And I think we've learned that having gone through a couple of these cycles before. The influencers, your favorite influencers that you follow on Twitter, might not necessarily have the answers. And a great point somebody made to me yesterday is that everybody has their own unique edge when playing the markets. And you have to figure out what that is. Some people are great at predicting. Some people are really good at trading and seeing trends. I need to figure out what that is and kind of build your strategy around it. And rather than just blindly following any influencers, including us. So I think maybe just to kind of expand on what we've been doing. So as we know, we kind of hit the market top back on the around the 22nd of November 2021. From there, Bitcoin has dropped from its all-time high of $69,000 to its current price point today of around $20,000. Now, lots of people talk about averaging down from the top. Whilst that's certainly one way of doing it, it's not quite the way that we have played this. I think both you and I instinctively knew as the Fed was starting to raise interest rates that actually, there was a lot of blood to come. And so we've waited for we've waited for some sort of key buying areas, and we've sort of bought within certain ranges. Now, where Bitcoin is at the moment, as you rightly said, Kevin, people are calling for a further drop down to the sort of 14K levels. If that comes, amazing. It's a wonderful buying opportunity. But I kind of get the sense with equities and Bitcoin currently that we're in that sort of good buy zone. And that's what we're doing. We're dollar cost averaging week on week, allocating a small portion of our total fiat fund, and we're scaling into things that we really like. And it might be worth just talking about sort of how we research some of these projects and how we choose what to scale into.
Yeah, I think that's a really good point. And just before we do that, I agree that your point about the buy zone that we're in now is very good for the long term, for long-term holders. I think we could see another leg down, but any market, the prices have already built in what's expected. So everyone can see what's going on in the market and everybody's got an idea of what may happen. Now, if we see another cataclysmic event, maybe there's changes in the situation in Ukraine and Russia, maybe there's some other disastrous financial situation like the Credit Suisse saga or Deutsche Bank. If something like that happens, then maybe we see another leg down. But Bitcoin has been holding that 19K zone for quite some time now. So, and that's a good sign. So I'm not too worried. Look, if you're buying Bitcoin now at 19K and if it goes down to 14K, the reality is if you believe in it, and what it's doing and how it's going to change the world and how its value is going to increase with more people on the network and more people using it, that either of those prices is an amazing opportunity for entry in our opinion. So let's discuss how we pick our cryptos, what process we use and why we do it that way.
Sure. Okay. So I think the first thing that I want to say here, and this is the thing I say when I have conversations about crypto to anyone, is that for me, I've probably become a bit of a Bitcoin maxi as time has gone on. When you sort of understand the unique digital properties of Bitcoin as a scarce digital asset, and you understand how it really is the only pure digital commodity, with a fixed supply, then it becomes really easy to understand how that's a good hedge against central banks, inflation, and really irresponsible economic policy. So Bitcoin is the standard. You really need to have that in your portfolio, irrespective of your thoughts on crypto generally. For me, everything else in the crypto space is just something to sort of play with, is just an opportunity to make more fiat, to buy more Bitcoin, or to just buy more Bitcoin. That's my thesis, and I'm not sure if you agree with that necessarily. I think we maybe have some differences in opinion on that, but that's my view.
Ben, Michael Saylor Rees.
Well, do you know, honestly, I think we've had some really brilliant people on this show, and as I say, I've been in this space. Bitcoin was the first thing that I bought back in like 2013, 2014, and I've kind of gone through this cycle of, we went through the 2017 bull market where we saw these ICOs, we saw these unique tokens being launched off the ETH network, and everything went bust. Pretty much everything that we looked at went bust, and Bitcoin really was the only thing that survives. And I think that narrative will continue to play out as experimentation happens in the Web3 space. I think only a handful of blue chips will reign supreme. But I kind of digress a little bit. I think, Bitcoin should definitely be part of the portfolio. Everything else is an opportunity to make more Bitcoin.
Great. My question to you is, before we go on to like what else we're looking at, what else we like, is to buy more Bitcoin. What are you going to do with your Bitcoin ultimately? Is it just a hodl scenario forever, or what are your thoughts? Because I always say the ultimate trade is the way that you live your life and the legacy that you leave, whether that's for your family, whether it's a mission you're on, whether it's something more simple, whether it's because you want to live in a specific house or you want to start a business or whatever it is, to just have more BTC on a hardware wallet isn't necessarily going to make anybody's life better, but it does give them freedom and choices. So what's your kind of like your ultimate trade?
Yeah, good idea. Good point. Bitcoin for me, I've said a few times that I won't, any of the Bitcoin that I buy during this bear market, I will never sell. Well, not that I will never sell, but I will. I'll hold until I'm sort of at retirement age. Hopefully by that point there'll be facilities available where I can borrow against my Bitcoin. I can use it as collateral. If I need to convert some of it back to a fiat system to pay for X, Y, and Z, then great. That's what I'll do. But anything I'm buying now, I will hold because I believe in it fundamentally, and I think more than ever, the worries that I had about the global sort of economic system, have just been heightened. I don't think this is going to get any better. I think the fiat system is now spiraling out of control. And whilst they might keep this merry-go-round going for another 10, 20, 30 years, I think fundamentally it's going to collapse in on itself. So Bitcoin for me is the safe haven. If I'm wrong, I'm happy to be wrong. I don't want to see the demise of the fiat system and billions of people to go, broke. That's not ideal, but that's my personal hedge. With the other crypto assets, so things like Solana, things like Algorand, things like Ethereum, for me, that's purely a trading play. So I'm accumulating during a bear market. As they increase in price during the next bull run, I'll be taking profits on those. I'll be looking to trade with that capital. And the aim of the game there is to just bring as much fiat back out of the system into my life, pay my taxes on it, and use that to build on the things that I want to build on. And maybe use some of the profits to buy some more Bitcoin, who knows? But that's kind of my approach, I think, to this current cycle.
Gotcha. Well, I'm very similar in that respect. I mean, we both like real estate. We both like land. We both like that optionality. I've got a very similar approach to you, and certainly some of the altcoins in my own portfolio. I'm looking to hold and trade some eventually and cash some out and move some back into BTC. I am looking to build an off-grid living and small rural tourism business in another country, and that is going to be really exciting. So I want things like my own water supply, my own food supply, my own energy supply, and that's kind of what BTC and the crypto market can help me do. And of course, I will be accepting Bitcoin when the thing's built in a few years. So, I think it just contributes towards the overall dream that I have, and I know you've got a similar vision there as well. Should we talk about some of the other projects then that we're looking at? Because you mentioned three there. You mentioned, what did you mention? Solana, Ethereum, and something else.
And Algorand. Yeah. So our selection process is actually quite rigorous. Typically, it starts with scrolling through the Twitter feeds for hours, and both of us coming to a consensus that something's worth looking at. Beyond that, we actually have a very unique way of finding out more about these projects, and I hope this isn't a trade secret that I'm about to share, but obviously through the podcast we do get to interview people that work on these teams, and typically we find out off the back of these interviews whether we think they're serious projects, and whether it's something that we want as part of our portfolio. Aside from that, we also read through the white papers. We try to understand what their mission is. We look at what the intellectual capital is as part of the team. Who has migrated from that sort of traditional business Web 2 world? Do they have successful entrepreneurs already? Are they executing? Are they well funded? How is the ecosystem building? All of these questions that because of the way that the internet is these days, are actually quite straightforward to find out. But we're quite strict about it, and we have had some projects that have come through that, at the face of it, look really good, very good branding. They sell themselves very well, but actually, when you sort of scratch beneath the surface, they are, I think, what you call a shitcoin. Yeah.
And it's not to say that shitcoins can't make up a very small proportion of your risk allocation. So just for clarification, you and I have our own individual crypto portfolios that we're now building out. I kept some from the last run, and I assume you did a little bit as well. And then we have a joint pot, and we probably have a different strategy with that to our own ones slightly. I'm a little bit more conservative with my one. I've got more BTC than we do in our joint one, and that's just because I can take a little bit more risk with our joint fund, and that's money that we make from a couple of businesses that we just gradually put a little bit of money in there each month and build that out. So some of the projects that I have my eye on that I like are the ones that have lots of builders on it. So they're encouraging builders and devs to build all kinds of different things on the blockchain. So these are things like Solana, love it or hate it. Solana's got enormous funding and people are building on it. Algorand has got enormous funding. Loads and loads of projects are being built on it as well. So they're two that I like from an investor standpoint. From a technical fundamental standpoint, I would say, well, yeah, Solana has had issues, to say the least. Are they fully decentralized at the minute? No, I don't think so. Not in the purest sense. Not in the purest sense that Bitcoin is. Is that a red flag? Well, a red flag. Yeah.
Yeah, I mean, it's interesting because I asked myself the question, and I know you disagree with this. Is do I even care? That's kind of the question that I have, because I think the social capital and the viral nature of some of these projects is enough to ensure that they're going to succeed during the bull run. And all projects go through technical issues. Solana I think they've had some downtime recently. I think I also saw was it Zcash that's also currently being attacked with its block size.
Really?
All of these projects, yeah, all of these projects will at some point struggle. But personally, I just don't care that much. We know that Solana and Algorand are being looked at heavily by hedge funds. We know that they are some of the biggest blue chips in the top 20. Do I think that a couple of days of downtime? Because fundamentally, I have to be really, really honest. I don't know if Algorand or Solana are going to be the blockchain solutions that change the world. I don't know. I'm not convinced yet, but they are good contenders for making, X multiples in the next bull run. And I think, it's just about accumulating at a low price and then selling high. But yeah, I'm sorry I interrupted
because this is, we are capitalists, and there's absolutely nothing wrong with that. We live in a capitalist system with the biggest problem with it is the unethical fiat money supply, not capitalism itself. So, and these are important considerations to make. Nothing will ever be as decentralized as Bitcoin. That's just the reality of it. So you've got this kind of like elite standard, and everything else kind of falls below that from a decentralization standpoint. But you're right about so philosophically, if you care that much, then just stick with Bitcoin. If you actually care about making more Bitcoin and investing into crypto markets, then do look at some of these altcoins. And it's not just Solana and Algorand, they're just two examples. But every single altcoin in every single bull run outperforms Bitcoin in fiat, in dollar value, and then you can switch some of it back to BTC. So I don't see a problem in doing that. One of the things that I did notice about those two blockchains, Solana and Algorand, is they're featured in the World Economic Forum
paper,
about cryptos. And there's a reason for that. There are others in there as well. But I think the blockchains that are going to do really well in the next cycle are the ones that tick the ESG box, or the ones that are super environmentally friendly and using very minimal energy. I don't want to have the whole debate about proof of work and proof of stake and energy usage. We've done that quite a lot on the show in previous episodes. But I think those ones will do well, because I think the spotlights will be shone upon those a little bit more, and governments really care about this stuff. So I think that's just a good hedge, maybe against the more energy intensive crypto of Bitcoin, where that's using way more energy, and there's a whole debate going around that. So for me, that's a big thing, is to look at cryptos that tick that box.
It's a very good point. We're heading towards the carbonization of everything, and projects that have a low carbon output or low carbon emissions will probably be favored by by the banks. But yeah, just to sort of pivot slightly and just sort of, you mentioned earlier about how shitcoins could make up a portion of your portfolio. I think that's a really good point to expand on, which is that there are always going to be low cap coin projects out there. I think they are further out on the risk curve in terms of building a portfolio. There's no guarantees that they'll survive. There's no guarantees that they will go on a bull run with everything else. But you can probably spread you could create a small allocation to those types of projects, really low market cap coins. And in my opinion, that's sort of like the gambling end of your portfolio. You need to really be prepared. You really need to be prepared to lose everything on that sort of portion of your allocation. But that you also, if you find the right gems and you do your research and look at the communities and look at what's being built, you may find 1 in 10 that does an absolute mammoth mega run. And you've only got to look at projects like XVG and XRP that were considered shitcoins back in the 2017 run and went on then to do 25,000% runs towards the end of that cycle, only to then return to their all-time lows. So you need to find the good stuff, but also then time the top, which is a completely separate discussion and very difficult to do. But
that's a whole other episode, a whole other season. In fact, maybe that was season 3, like timing the top of the bull run. Because I'm looking at my portfolio now, and in there I have I've got some more speculative crypto. So I'll tell you what they are, because I do like them. So VRA, and we've had Elliot from Veracity on the show several months ago to talk about their project. Low market cap, incredible use case. And price-wise, I mean, the price of it is so low compared to its all-time high. It's absolutely staggering. I mean, we were something like nearly 7 cents its all-time high, and now we're like 0.004 cents. So, I've literally got a small amount in there. I'm not going to say how much it is because I don't think it's appropriate, because a small amount for somebody else might be a lot, or really small for somebody else. So, but I've got a very small amount in that. Talcoin is another one that we really like from the last bull run. They're still building some amazing things. Again, it is speculative. Will it make it? I don't know. And then I've got Trias, which is another one, and Nord, which is another one. And they're all available on KuCoin. I've just got a small allocation, and I might put a little bit more in over the coming months. And then some of the other blockchains that aren't so some of the other cryptos that aren't so speculative. We've got some Zilliqa, and we've got some KDA, some Kadena as well. So I should mention those two.
Yeah, absolutely. And just 2 final points from me before we wrap up today's show is typically there's a theme for each cycle. Back in 2017, it was ICOs. The theme of the cycle that we've just gone through was sort of DeFi, NFTs. There will be something which emerges for the next bull run, whether that's 24, 25, 26. And it's your job to go out and find what that theme is ahead of time. You need to be tuned into social media. You need to be listening to which projects are kind of emerging as the ones that people are excited about. And that will sort of give you a clue as to how best to allocate. The second point that I'd make on that is look for relative strength. So if you're using apps like TradingView or any other charting apps, take a look through the top 20, top 30 cryptocurrencies and figure out which ones are performing best during these bear market downturns. And that could be relative strength, where perhaps, the total downturn for a crypto has been less than others. Maybe it's had a 70% drawback where everything else is 90% underwater. It might be that during these sort of mini bull rallies in the bear market, A really good example of that is Atom. Atom has shown phenomenal relative strength and actually has performed quite well during some of these relief rallies. So those are two tips which I would suggest when sort of looking to kind of finalize your portfolio just ahead of the next bull run. And of course, you don't have to do it all in one go. You really should take a longer view with this. And we've sort of agreed that we'll do this over 12, 18 months. I think we're about 10 months in now to building this out. If we need to extend that, we will. If we need to put fresh capital in, we will. But it's all about just taking it step by step. Don't jump straight into one position right now because you're worried about what the price action will do. Dollar cost averaging is always good. But as we say, try and wait for the price to settle before you start on that strategy.
Yeah, exactly. I think that's a really good plan and one that we're going to follow ourselves. So I hope you found this useful. Do let us know which cryptos you really like and which ones make part of your building a portfolio in a bear market plan, because we would love to hear from you. And
absolutely,
if there's a particular token or project that gets spoken about a lot, then maybe we'll even have them on the show. So we'll catch you next time.
We hope you enjoyed this episode. It would mean the world to us if you could leave a review wherever you're listening. This really does help and allows other people to find us online. You can keep up to date with new releases of the podcast by subscribing and following us on Twitter or Instagram for the latest crypto-related news. Information provided by Cryptopulse via this podcast, website, social media channels, and any other medium does not constitute financial advice, investment recommendations, or any other type of advice whatsoever. The Cryptopulse team are not professional financial advisors. Trading and purchasing cryptocurrencies do carry risks, and anybody wishing to partake in such activities should seek professional advice.